How's it going, everybody? This is Tim with King's Options, and we're going to take a look at what's coming up for next week. We're going to take a look at what happened last week. I'm going to start with all these tabs I got open here. Just a couple things to show you. Let's go over to the sector tracker first. So the one day yesterday, of course, was pretty crappy. I shouldn't say it was crappy. Actually, I had a great day, but it was very very red day, as you can see right there. I don't have to explain it to you. You got it. Okay, so when you look at the 5 days for the full week, you see that just about everything was red, but most of it happened, as we'll see on the charts when we go there, over yesterday and the day prior. And we were just on there, so I don't know why it's taking forever. But so yesterday you can see big moves, the day prior. If you're looking at the month, it's pretty ugly for the month too, and a lot of these sectors. Utilities seems to be doing all right. Let's go out to 6 months. So the reason we're going out over longer periods of time is just to see how it can kind of mellow things out for a lot of this other stuff. And over the course of 6 months, the ones that are really hurting: healthcare, consumer discretionary. So take that for what it's worth. As a day trader, I tend to stick with the 1 day 5 day. I'm worried about what happened over the course of the week. I'm worried about what happened yesterday. More over the course of the week as I go from week to week. Just as a general big picture look. Economic release calendar. So the biggest thing that happened this past week, before we get to anything that's coming up, was the FOMC rate decision, or lack of rate decision, which the interview afterwards actually put, in my opinion, Powell in a very hawkish light, not very dovish. And in truth be told, I see a couple different sides of this argument. Fact of the matter, first off, is that get this out of the way: inflation is not rising prices. Okay, I don't care what anybody says, and all the crap that you keep hearing. Inflation is an increase in the money supply. Higher prices come because we have an increase in the money supply, but inflation is the increase in the money supply. Nothing more, nothing less. So, money printer go burr, we have inflation. That is inflation. That's the inflation. Okay? The short-term effect of that type of action is not seen right away. That's why it's a short-term effect. If anything, people have more money to spend right off the bat before prices can catch up, before costs catch up. Having more money is not necessarily a good thing unless it's backed by something, which of course money printer going burr is not backed by anything. Crypto has more backing it than that. So on the one hand, I do see Powell's side of it, saying no, we want to keep interest rates here because it prohibits cheap money, it prohibits borrowing more money, it prohibits printing more money at a faster rate. Now, they're still printing money, don't get me wrong, but it does prevent it from happening at a faster rate. In that respect, that can make a lot of sense. On the other hand, given the deficit, given the debt, having interest rates that high, given comparable central banks and the moves they're making in their countries versus ours, we're not competitive. We're not competitive as a nation. We've got some great trade deals going in place, and put the tariffs thing to bed, folks. Come on. Oh no, we're going to pay more. You're supposed to pay more. That's the whole point of tariffs, and making it prohibitive to buy shit made other places, and making it effective for places to move their manufacturing here, or lower your prices. Do a better trade deal. That's the point. So quit whining about it. That's actually a good thing. Does it hurt in the short run? Sure. Yeah, absolutely. 100%. But is it good for our country? Is it good for our future generations? Yeah. Also, 100%. And you're not getting that. Well, some of you are. A lot of people aren't. At any rate, if the money was cheaper, if the interest rates were lower, then less of the GDP would have to go to pay for the interest rate. It could go more towards the principal on the debt that we currently have. So there is that argument. But like anything else, what usually happens? Nobody spends money like the federal government. So as a trader, I got to tell you, I would love to see interest rates drop as a trader. as a citizen concerned about his country and the economy and the state of overvaluation that everything is in currently, which we're going to go over here in a minute. No, I'm a bigger fan of the higher rates. I'm pretty hawkish on that. Now, that's just my opinion. Ultimately, being a day trader, I'm going to trade the markets I got, and the different announcements. I can anticipate some of the reactions that we're going to see, but I can't anticipate the actual decisions people are going to make. So, people are going to make decisions. I'm going to watch, see what happens, and then I'm going to trade the aftermath. That's what's going to happen. All right, so that was the biggest thing last week. There were a couple other things. GDP came in pretty strong. Jobs numbers, I guess there's some dispute over whether they're good or bad, but I've had that argument for quite some time. Different situation, but essentially halfway through, well, it was before Obama's second term, but while he was running for office, they changed the way they counted unemployment. I mean, they literally just changed the way they figured it. I'm going to go into that, but that was when I started having a problem with it, so it's been a while. This upcoming week, Monday, I only have this on market movers, and I only have it on the U.S. Okay, so when you're looking at these economic releases, there's your preface. Monday, we got nothing. Tuesday, we've got trading goods and services, 7:30 in the morning, Central Time. Petroleum status report on Wednesday, 9:30 Central Time, and then Thursday, as always, the employment situation, 7:30 Central Time, and nothing on Friday. You can see that by the little yellow versus gray calendars, but I thought I'd pull it up anyway. Okay, we also have earnings releases next week. Take a good look. There it is. Pause the video if it's not here long enough for you, but we do still have some pretty good names, pretty big names reporting next week. Just at a glance, Palantir, AMD, Shopify, McDonald's. Some of these things are industry standards. Some of them are simply pretty hot stocks. Eli Lilly, right, coming up. So there's a good number of names, and I'm not going to go through it anymore. There you have it. Let's go to. I'm going to show you a couple of these. So this is a Buffett indicator. I've talked about it before, and I really want to show you the overvaluation that the markets are in. So the Buffett indicator is total market capitalization to GDP. And this one is using apparently the Wilshire 5,000, right? But as you can see, here's roughly speaking where they call it average, and you'll see where this is pretty consistent on the next one as well. And this is our overvaluation. This report is showing 2.7, the highest being 2.7, just a little bit higher than where we are now. But that's overvalued. That's really overvalued, folks. That looks like crap. Okay, so and then here we go, Buffett indicator. This is a different valuation, or looked at the same. It's the same factors, but looked at in a slightly different way, because you're going to get different numbers. However, what you do see between the two of them is that you are still over 200%. Okay, so yeah, this one's calculating at 205%. This one's calculating it at 2.7, which I can only imagine as a percentage is roughly speaking equal to that. But either way, just want to show you they both indicate the overvaluation of the stock market compared to GDP. So I keep hearing these things. Somebody asked me today, they were like, hey, so how about the stock market crashing? Last week. It's like that wasn't a crash. It's like the stock market have to come back 50% just to get properly valued, and then go down even farther to be a crash. It's not a crash. Okay, so just keep that in mind. All right, let's see what we got here. We're gonna pull up charts. Now we're just gonna go over the four main markets: RTY, Russell 2000. Right. So we talked about this. These are some numbers we put on it last week. Well, last week didn't do so good. Last week came down the whole time. And what did we say when we started? So that was the 28th, 29th, 30th, 31st, and then the 1st. So yeah, that was Monday. We were here. We're talking about this area of kind of consolidation, and they would have to get all the way through it. Well, spent the week getting through it, and then the last 2 days just kept going. This is the area we put saying, okay, probably see some liquidity below here, this being the final point, which of course we dropped below yesterday. So all these stop losses are being taken out. And where are they being taken out to? Right? Next area of consolidation down, because this was a nice run up, is going to be this area. So let's take this little box here, and we are going to put it on the next kind of consolidation area that we see. Yeah, you can probably run it all the way over, that's fine. Okay, so basically we dipped into it. You can see the indicator I've got here in the center, which is my stacked 21 EMA. Not going to go over it, but basically red means trending down, yellow means all the EMAs are crossing, and green means trending up. So we went from, on Friday, as of yesterday, we went from green to yellow. It dropped so much that it pulled all the averages out of alignment, and we are now crossed. Now, what can we see going forward? First off, this top doesn't change. It doesn't change because we still haven't broken out from the highs, right? So that's still there. Next thing is this area right here. We're just going to go and delete it because we're fighting. And I'm not going to put another line on it. So basically what you had here is you had sellers come in, right? You had sellers come in here, so you had this kind of a double top, and then they sold off, sold off, sold off. Well, here's the liquidity. So where do sellers have to defend? Obviously they have to defend this position if we get up here again. But if we get up here again, then we're actually sitting in a pretty good position. Anywhere back up in this consolidation is essentially normal. Well, normal for recent trends. So where else would they defend? Well, you figure that this run up into this consolidation started here, right? Started here. And then all these people were looking for a breakout of this area. Some of them looking for a breakout of this area. So basically from this point, if we look at it, so let's put a line here. This is where you've got to say, all right, folks, sellers have to defend this line. Sellers have to defend this line because this is where the buyers have to defend this line. So they can push it back up, but this was taking out those very buyers in here. So at this point, yeah, sellers would have to defend here. And I said the reason I brought up buyers is because this is only one day. They could definitely come in on a rally on Monday. You know, this could all be sentiment driven. They come back in and say, buy, 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 get it back up above there. That's what I'm saying. Buyers could still defend there. But if we continue down, then this becomes a definite seller must defend area. Probably should have just moved that last line instead of deleted it. This will be kind of a watching area. I'm not going to make any decisions here because it's pretty sketchy. I mean, that's based off wicks. If we drop down farther, here's our consolidation area next that we're looking at. You got a little bit of liquidity here, you got more liquidity down here. I mean, basically all this, everything below is liquidity, but you want to drop or think liquidity runs. If it's just going to go down, take out stops, you want to think below the consolidation areas. So I like this. This is another one, right? Which it's kind of hard to say. This was impulsive, so I'd probably say liquidity below this area. But right now I just want to see if we get into this consolidation range or if we're going to push back up into this area up here. And we'll find out. Let's go ahead and go to the YM. And these all look a little bit different. I mean, basically the same in what happened over the week, but a little bit different in terms of their longer term structure. So here's the high. We can go ahead and move that a little higher. Now we got a new high, and that's out of a consolidation. It's kind of a double top. However, this was double top with a higher right top. So usually that indicates more strength than weakness, but very passionate sell-off. We still have not been pulled out of the trend on this, so technically we're still in the green as far as the moving averages are concerned, exponential moving averages are concerned. We have dropped below, so this is the same structure, right? We have dropped below, so if it decides to go down, where's it going to go? And that's where we're looking at the next consolidation area. Where's she going to go? Where's she going to go? I would say there-ish. Okay, but this is the consolidation area. You can argue, say, put the bottom here, put the bottom here. It's fine. It doesn't matter. The point is, it will be in this price range. And honestly, all the buyers that struck out above this top right here, and yeah, I'm not going to count the wicks, but above this top right here, so anywhere, call it from this slight hesitation, all these buyers should be stepping in to defend if they are going to. Now, it would appear that maybe they did. We'll get some confirmation of that come next week. If this is also a very bearish candle, so it's also possible it didn't. End of the day, you know, you saw a few come in and kind of recover a little bit, but you know, head down, intro to the next week. So that's where the YM sits. Let's check out the ES. ES is kind of interesting because we got matching bottoms here. This one's a tad bit lower. Got matching bottoms here. Also still in a everything's still in the green. And we didn't drop all week. We kind of hovered sideways all week until the last 2 days, which not only did we hit the all-time high, but we came down and saw this floor being hit. And you got a ton of liquidity down here, from here to, we've already got it marked, right, to here. This is all liquidity. These buyers that bought from this breakout, their stops are down here, or you got stops under each one of these. And this range here, all these buyers, all these green candles, all their stops are going to be right in here. So this is going to be a very liquid level. We can very easily see it drop down into there, and then what does it do from there? If it does go through there, what does it do? We go down to the next area of consolidation, which is going to be yeah, there-ish. I wouldn't even come over here, more like between here and here. So we'll see. On the other hand, if we start to come back up, then this bit of consolidation, sellers were real happy when we broke below it here. So really, I'm looking at this area. Sellers, if we pop back up to this line, that's a good area for sellers to say, nope, we're not accepting that, and push it back down. But that still puts us in this range. Just instead of in a buying fashion, we're looking more at a selling, and then it's which takes control. So we'll see what happens. Always we'll see what happens. Do not predict the future. Finally, we got NQ, my favorite, the one I trade. Interesting picture, same kind of thing. Moved sideways. Again, we had Thursday hit all-time highs and then drop like a rock. And there are lots of speculation on the news flow as to why it dropped like a rock. But the fact of the matter is that no matter what you do, all-time highs are difficult to play at. And they're difficult to play at, one, because you don't have any structure above, and the other because it is so ripe for sellers to squeeze all these people's stops. It's just a matter of letting it. It's like what am I thinking? You know, like watching dough rise when you're baking bread, and after it rises and you got to punch it back down. I mean, it deflates like crazy. But the good news about all these drops in these is it's giving us structure above to then work with. So if it comes down even farther, I would love to see it actually hit into this area. I mean, does that look really ugly for some of my long terms and some of the gains I made? Of course it does. But for trading, that would be fantastic because that gives us all this structure above. So it wouldn't be a bad place to be. It'd be a nice pullback. The only thing I want to do here that we didn't do on the other ones, and I'm going to delete these lines, so if you have them, great. Also, again, you see this is the run-up, so anybody that bought from this breakout right here and ran up, this is an area of liquidity. And actually, I would put the top of it a little bit higher as well, below this line. And we are right at the bottom of this, so we could very easily see all these buyers come in and defend this area and just move sideways again, just like in the ES. It would then be okay. Our sellers or buyers going to take over from this point. Don't know. But let's, for the fun of it, do something else. Let's figure some percentages real quick. And the biggest reason I want to do that is because whenever we start to have drops like this, I want to know where my 5% down, 10% down, 20% down numbers are. So we've got a high of 23,845. minus 5%. So we have got a price line. Call that 5%. I don't know why I always do that. 5% is 22,652. 22,652.75. Okay, so we are almost 5% down. And the reason I like to do that is because if you pay attention to market cycles and timing, right? Again, every 50 to 70 days, I think it is, you get a 5% pullback, between 5 and 10%. I think it's 2-3 times a year you get a 10% or greater pullback, and then once every 4 to 6 years, you get greater than a 20% pullback, or 20% or greater pullback. So these are just cycles, and yes, they're pretty loose, but I like to keep an eye on it to see if these pullbacks are on time, and whether they're actually outrageous or whether they actually just fall in line with the market cycle and we're actually in a pretty good spot. So that's why I put these lines up here. Let's get the 10% line, which is going to be 10%, 21,460.5. Bam. There you go. Incidentally, look at where these are sitting. Funny how that works. We've already talked about this area. We've already talked about this area, right? And then finally, we will do a 20% line. Okay. That's 19076. Okay, so there's 20%. And incidentally, well, it's when we started to come out of the mess, I'll give it that. But either way, as you can see, yes, was it a couple ugly days? Sure, we're going to have them. For traders, even for investors, these are fantastic days. What I would like to see is actually, I would like to see us break this 5% line, probably come down to about 7.5%. Like I said, get back into this mix, and then see these buyers, all these buyers that came in here to build it, first to build it up and then get it up here. I'd like to see a lot of those buyers step back in and raise it back up, and that just puts us in fantastic market timing, market cycle timing, and a good place to buy. I do think that we've had a lot of great trade deals. We had a lot of great progress being made when it comes to contracts that were written. Here, check this out. This was such a mess. I was watching Coinbase, right? Look at that. Oh, it's so ugly. But this is what I'm talking about with great deals that have been being penned. So Coinbase has been making inroads in with banks, and then legislation is going in to support stablecoin and whatnot, which will help Coinbase. Whether you like it or not, it's going to help Coinbase. But they had probably the worst. Look at this earnings per share, 12 cents. 12 cents. They were 90%. They missed by 90%. This was like the worst one I think I've ever seen. I'm sure there's been others, but the worst one I've seen, at least that I can think of. And yeah, so they dropped quite a bit, fell down to a bit of a consolidation area. I wouldn't be surprised if we saw them come back down into the 240 to 270 level. Wouldn't surprise me, not even a little bit. You know, I mean, that's just incredibly ugly. But again, this happening while they are making these inroads into other places. So unless everything just suddenly collapses, which is always possible. I mean, it's always possible. At any point in time it's possible. But the likelihood is not that great. So, unless that happens, they're setting themselves up for future success in a very big way. And I really like Coinbase. I wouldn't mind seeing them come back to here to make some investments, do some options, maybe some credit spreads. I could think of a million different ways to play this if it actually got back into this consolidation range. And that's a steep enough drop. I think a lot of people would say, okay, good, buying opportunity time. This is probably going to spark some buying. I will be shocked if we do not actually see some of this gap filled. Like, let's say we are going to drop down lower. I'm not saying we do. We could see it turn right back around. But let's say we're going to get to this area. Let's make a presumption. If we just see this stick and not see some of this gap filled before doing that, I would be very surprised. Very surprised. But I get surprised sometimes. So we'll see. At any rate, that's where we sat. Yeah, it was a pretty ugly week for a lot of things. And there's a lot of speculation as to why, but personally, when I look at these markets, S&P 500 is my go-to on these things. Let's delete these, and let's do the same thing for the S&P 500. Probably should have kept those lines. Let's give it a 5%, so 64, 68.5 minus. Don't you hate those lingering coughs when after you've had a cold and it just like stays there? Okay. So 5% is going to be 62.40, 62.40. Yeah, we're just going with that. It's like 0.075. We're not doing that. 62.40. Okay, so there's your 5% line. What do? We fell back right to 5%. My goodness. It is amazing how these things do this. Okay, so next 64, 68.5 minus 10%, 5821. 5821 point. We're going to go 50. It says 65. We're going 50. Ballpark is good enough. Quarter tick, quarter point, ain't gonna mean nothing. So it's 5%. There's 10%, right? And then 64, 68.5 minus 20%. Is 5174.8. So there you have it. And even then, if you look at the 10%, this is a lot of consolidation before that 10%, which it's going to have to fight with. So again, if we did drop below 5%, I wouldn't mind seeing it come back to 7.5%, maybe 8. That's probably a better guesstimate. But yeah, 7.5%, maybe 8 into this consolidation area, and then seeing if all the buying that happened here, which seems to be a little bit more orderly than say this nonsense, supported and kept going. In which case, hey, we had our 50 to 70 day pullback and carry on. Not a big deal. Either way, we could even call that this because it actually hit 5%, a little bit over 5%, hair over 5% now. What was the low on this? Low on this is 62.39.5, so literally half a point lower than 5%. There you have it. So something to keep an eye out for. Watch this in the coming week, and we will check you at the end of the week. So, all right, happy trading, everybody. Bye bye.